So we're right in the introduction. I want to talk about your personal risk profile. What am I talking about? I'm talking about the balance between the potential return you can make and the potential risk you'll take on. Now, the key is the higher the return, the higher the risk. The lower the return, the lower the risk. And I should always say the potential return. It's always a potential return. There's no guarantee of return, but if you're putting yourself in riskier stocks, your risk is certainly going to be higher. Again, if you're putting yourself in a lower risk situation, your return's going to be lower. There's that balance. See, we can see this balance beam. It's moving back and forth. High risk, high reward, low risk, low reward, or low risk, low return, high risk, high return. Return, reward, it's the same thing in the stock market business. It's important to find that balance. There's no way of getting around it. If there was a way to get greater returns with minimal risk, people would be doing it. The best way to really maximize your return and minimize your risk is to have a strategy. And again, we'll go over the stock market strategies I put together. They're awesome. They work really well. They're on different timelines. So whether you like trading in stocks, in and out, day trading, whether you like long-term investing, I have a strategy for you. So let's talk more about this risk versus return. We can see it's a curve. It's a relationship. The more risk, the more potential return. So what kind of investments are we talking about? Let's start with a very basic investment. We all have cash. So cash is really a low risk, low return type of investment. I'm referring to cash in, let's say, a checking account or a savings account. Again, the bank's going to make sure nothing happens to your money. It's a very safe investment. But what kind of return do you make at the bank? You don't make, you don't make any money in your checking account. You really don't make any return in your savings account. What the bank does is they use your money. The bank uses your money to make themselves more money while they pay you pretty much nothing. That's no problem. We're not interested in investing in cash. We're not interested in any sort of currency forex crap. We are talking about stock market investing. And we're not interested in government bonds. Again, government bonds, a little bit more return than cash, a little bit more risk than cash. But again, a government bond, pretty safe investment. But we're not talking about that. We're going to talk about stocks. Now, large cap stocks, we can see the risk a little bit higher. The return is a little bit higher. We're talking about small cap stocks. Again, if you don't know what I mean by cap, just ignore it for a while. Large stocks, a little bit less risky. Small stocks, a little bit more risky. Venture capital, again, we're not talking about venture capital, but just to put it as an investment. Let's say you're a shark on Shark Tank. Those businesses are startup businesses. They're high risk, high reward situations. They get in on the ground level. Again, a venture capitalist, they help. They're really savvy business people. They help the business. They take equity. So maybe when the business goes public, eventually they become really rich. But again, most of startup businesses fail, and venture capitalist is all about startup businesses. And penny stocks. So I want to say right in the introduction, you want to stay away from penny stocks. This isn't the penny stock course. If there's anything you learned in my introduction, my story I was referring to, you can't get rich overnight. This isn't a get rich quick scheme. This is a build wealth strategically and slowly strategy. And so see how close penny stocks are to the next investment, the lottery ticket. The lottery ticket is the highest risk you can take because it's a 99.9% fact you're going to lose. But think of the return you made when you take a $2 lottery ticket and you turn that into $2 million, $5 million, 10, whatever. You win the jackpot on a $2 lottery ticket. How's that for return? That return would be incredible. But again, the risk is high. You basically accept the risk when you buy the lottery ticket. You're not upset when you lose because you kind of know the odds. Again, I want to make that clear with penny stocks. You shouldn't be upset if you lose all your money in penny stocks because they're really risky. And there's no doubt, I'm not denying you can't make great trades and great returns in penny stocks. I'm saying they're really risky, and look how high they are on our risk versus return chart here. So for the purpose of this course, we're going to take a look at large stocks, small stocks. That's it. We're going to focus on those. We're going to become masters